Well, thanks so much for tuning in to India Market Close, and it's steady. Financials are doing really well, and relative to what it was at the start of the trading day, wherein IT was doing well and finance was not, while the Nifty is up 1/3%, it is Nifty Bank which is powering ahead. Nifty Finance too is up close to 1%. So some changes at the helm, but for the fact that the market breadth has remained constant. It started off very well, came off a little bit, and then it stayed in that very steady, narrow band for a better part of this trading day today. Look at this, but in favor of the advances. Let's get the heat map up on the screen to just show you what's happening in the large cap end of the market. We'll make this quick, but as you can see, there's a bit of a change at the helm, wherein earlier it was about what's happening to select autos and a couple of IT names. Power Grid is now top of the pile. There is Wipro, which is doing well, and there is some other names too, but Shriram Finance is right up there too. It's talking about financials doing well. The Adani duo are continue to do well. M&M continues to do well after the investor day and the brokerage notes that have come out of that. But a lot more stocks in the red than what they were at the start of the trading day. Maruti continues to sulk, and Pharma, not a big bang drawdown, but yes, down. Still about 1.5% down for Dr. Reddy's as well. And I would reckon some of the other stocks, Divi is not quite correlated there, but down because of the overall pressure. But some of the others too could be under a bit of stress today. So while defense is powering ahead, and Tamanna will speak about it, while some of the other infra names are doing very well, and we'll speak about that, on the large cap end of the market, it is Maruti and Pharma which is sulking. The Adani twins on news which are doing well, and otherwise financials as a pocket is the one which is holding fort today. It was IT in the morning, it is finance now. Good afternoon, Tamanna.
Good afternoon, Niraj. And all said and done, we are holding above 23,500 in style, I would say. Yeah, definitely your advanced decline ratios have narrowed a bit and gotten a bit negative. But overall, if I look at, so you have narrowed a bit, but you're still holding on. And the advances have it as of now. Let's look at what the mid-cap and the small-cap indices are doing this afternoon, and that's really where the story lies. The mid-cap 150, just less than 0.5% up, but the small-cap index about 1% up. So this is where all the action is. And you know what, let me quickly pull up the BSE 500 gainers and losers before I get to the specific stocks which are on my radar, because this is, like I said, where all the action is. MMTC, it's a gold silver exchange company, government run, 10.5% up. Avanti Feeds, Metro Brands, HFCL, of course, because they have not been charged with dumping duties for optic fiber cables, and then it all comes down to the defense pack. On the losing side, you have Gujarat Ambuja Exports, Chemplast, etc. A lot of the chemical pack, Gujarat Fluoro as well, which have been companies which have seen pain for a while, but not massively if you see. So on the broader indices where the action is. Let's come to specifics and new specific companies this afternoon. Som Distilleries, we've been tracking it since this morning. A horrifying story over there. The company has washed its hands off, says that the 50-odd children working in their factory in Madhya Pradesh was because of contractors, and they have nothing to do with it. They don't know anything about it. That stock still 6.5% down. Zomato, Paytm also still in focus. But where the mood was a little positive on the talks between the two for their ticketing business, for Paytm's ticketing business, it's turned decisively negative. Zomato still flat, but Paytm now in the negative territory. HAL, of course, is the shining star of the day, 6.5-7% up. They will be making 156 combat helicopters for the Indian government. It's supposed to be a 45,000 crore order, but look at the entire defense pack. I want to look at Mazgaon, Cochin, BEL, BDL. That's where all the action is today. Bharat Dynamics, Cochin Shipyard, all of them doing really, really well. So defense is the name of the game. Premium explosives is something we should pull up as well if we quickly can, because once again, the hunt is on for more and more companies which have a defense exposure after those very, very lofty defense export targets have been put up. So we'll pull up premium explosives in just a bit for you. IFL Securities is the other one that I wanted to talk about. IFL Securities has put out its results, which were dismal. They said that we are now following all RBI regulations. Frankly, the street is not giving it a thumbs up yet for it. HFCL, we talked about it. They've not been indicted in the dumping of optic fiber cables in the US as opposed to a lot of other Indian companies. So that's why there's a positive there. Zydus Life has seen US FDA inspection at their Gujarat plant, after which there was an OAI, that's an official action indicated notification that they have got, which is why it's doing badly today. And I have to talk about Ixigo. Ixigo is the new kid on the block. It has had a stellar debut. So all your online travel platforms have been doing well. And you've seen Ixigo doing pretty well as well. So 74% up. What a great debut for Ixigo. Niraj, a stock which was, I think subscribed 98 times, if I'm not mistaken. Yes. Okay, they pulled up Premier Explosives since they've done that. Yeah, I was talking about defense play, but that's 10% up. And Ixigo having a great day on the street.
And I think a lot of people, Vikas Prasad today was talking about how it may not be the last time before we see IPOs of this nature coming out in this space. Because while it is not a new space, it's certainly not mature. Vineet Bulinchkar of Ventura Securities and Aditya Agarwal are joined in to talk about this and more. Actually, since we're on the topic of Ixigo, let's start off with that, Vineet, and then we'll get to the broader markets too. But fabulous debut, and it's good to have an IPO list well and then actually pick up steam from that. What do you think about this or this whole, platform companies related to tourism or this whole tourism theme per se? And if any view on Ixigo, then more than welcome.
So we don't track Ixigo, but overall we have looked at Easy My Trip, we have seen Yatra, and Ixigo is a far better play than both these companies put together. I believe that this platform, this tourism-related platforms are going to do really well. We've only scratched the tip of the surface. 15 to 20% industry growth over the next 5 to 6 years is easily doable. And to my mind, this stock is buy on declines.
Fair call. Buy on declines. Aditya, don't worry. I want to ask you about charts for Ixigo. Irrelevant per se. But let's talk about the charts for the market because it's a good day for banks. They have recovered a little bit of lost ground today. What's an ideal trade on the indices, be it the Nifty or the Bank Nifty today?
Good afternoon, Tamanna. Good afternoon, Niraj. Thanks for coming to the show. To be honest, if you take a look at the Nifty, it's just up 70, 80 points. It's not doing much. It's the banking index, which is actually charging the Nifty ahead. If you take a look at Reliance is down, most of the stocks are down. It's only the HDFC Bank and few names which are keeping the Nifty up at what it is right now. Bank Nifty, Niraj, I think there is definitely a trade, and the underperformance of the Bank Nifty, we can see a catch-up play there. Above 50,250. If we get a close on the Bank Nifty, which it looks like, I think so, 51,000, which was the high post exit poll, can be retested on the Bank Nifty, and we can cross that as well. And I think it's time for the banking stocks to take leadership, and from large cap private sector banks to large cap, mid cap banks, I think all of them will participate in the banking index, and banking index, I think, is where you should play if you're looking to go long for a target of 51,000. Talking of Nifty, I think so, 23,500, though we are trading above that, that was the immediate resistance, but I'm not seeing that kind of a runaway rally in the Nifty. Every time we make a high, it's just by marginal few 30, 40 points on the Nifty, and though it's not falling also, but we're not seeing that kind of an up move on the Nifty. So I would like to stay away from the Nifty, maybe focus more on the Bank Nifty if I have to trade an index.
All right, stay away from the Nifty, focus more on the Bank Nifty. What about Aditya, your stocks this afternoon?
So I've got a couple of buy recommendations, Tamanna, because the undertone of the market is going strong still. So Tata Consumer is something which is looking very interesting to me. Stock hasn't seen the kind of run up yet, but I think it's building up for a good up move in the coming trading sessions. So at current levels, one can definitely look at going fresh long on the stock for a target of 1250 on the upside with the stop loss at 1060. The second is from a pharma pack, Ajanta Pharma. Stock after a decent correction went into a consolidation phase, and now it's breaking out of a inverted head and shoulders pattern on good volumes. So I think makes a decent buy at current levels for a target of 700 on the upside with a stop loss at 585 on the downside.
Okay, Ajanta Pharma, some of Aditya's top picks. Vineet, hi, very good afternoon to you. Wanted to get your take on Maruti and M&M, and also some of that context coming from the Hyundai IPO. We're going to have another big issue in the market, but one from an auto major after, I think, 2 decades or so. Do you see Maruti in that sense losing some of its premium as being the only play for that broad passenger vehicle exposure?
Not really. I think that there'll be softness for some time because people will take money off the table and maybe want to invest in the upcoming IPO. But that's still some time away. In fact, I think Maruti will rally from here, and these dips should be used to buy into the stock.
All right. So Maruti. What about M&M? Are you bullish on M&M considering that they are moving to fill in those gaps in their portfolio, Vineet?
So I think that's a long-term story. At this point in time, I think M&M is fairly valued, and I'll be looking at it on declines.
So M&M on declines, Maruti on declines, and you're staying away from the two-wheelers right now, or they're relatively looking better to you?
The TVS Suzuki is a good play. We like TVS Suzuki.
Okay.
Wow. TVS Motors 2456. M&M, Vineet and Ventura don't seem to be in favor. A clutch of others have given a positive thumbs up to M&M as well. So bear that in mind. But what remains an unequivocal favorite, never mind what the view on M&M might be or Maruti might be, the unequivocal favorite of the market remains defense. Now look at the stocks today as well. After a heady run-up, they've perked up even further. Now you would want to know about the numbers, about maybe the guidance, about the valuations, or some of these things. Anushi Johnson to talk about this space in detail. And Anushi, just lay it out for us, the lay of the land, what's happening with the defense name and what could be fueling the rally.
Absolutely, Niraj. So defense stocks have come in guns blazing, as you can see, especially in today's trade. Now, key stocks like you see Paras Defense, Cochin Shipyard, HAL, all have clocked in about 6 to 7% of gains. But this is a continuation of the rally that we are seeing today after Defense Minister Rajnath Singh has targeted about 50,000 crore of defense exports by 28-29 itself. So if you had to look at the 2024 number which we had clocked in, that was about 21,000 crore. So to see this trajectory from 21,000 crore to 50,000 crore, coming in the next 4 fiscals that we are looking at, strong growth for the companies going forward, and with their efforts in the local indigenization remaining strong, again the companies remain on a strong footing here. Now the Ministry of Defense has remained steadfast in their boost to increase their localization going forward. The FY24 they have reported about a 32.5% growth also that we are looking at. Private sector continues to remain in favor. 60% of the growth in exports that we are seeing here emitting from this side again going forward. Now, even if you have to look at the other plays as well, now Defense Ministry, there was this 2014 to 15, 70% of imports we were heavy on that the government has targeted to bring down to 30%. So quite a shift that we are seeing from the company being a defense import heavy company to defense export. Now the focus shifting from here going forward. Now, as to how the company has fared in terms of their allocation in the union budget, so if you have to look at again the defense exports data, 8,400 crore of data exports that we are looking, this has gone up to 3x, 21,000 crore, and this is just going further to 50,000 crore mark that we are looking at. Even if you have to look at its budget allocation over the fiscals that we are looking at, 6.2 lakh crore that was declared in this interim budget of 2025, showcasing about a 18% of growth over here. Similar trajectory, 1.5%, 9.8%. So the growth numbers have been increasing steadily over the fiscals. So the focus remains here. Even if you have to look at its percentage in the total union budget expenditure, that has ranged from 13 to 15%. And so focus remains on how it remains going forward. Now coming to specific on the companies on how they have done in terms of their order book, 94,000 crore of order book, 14.9% growth. Now if you have to look at its export sides, HAL still has about 1 to 1.5% of the mix on the export side, but it is aiming to increase this mix going forward. Now while we talk about other companies, BML, BL, they have clocked in about 25 to 38.5% growth, while Garden Reach has seen about 9.8% decline in their order book going forward. So this is how the company's order book looks like as well. Now, coming to the stock performance, if you have to just go back to what we saw on the election day, we had seen about a 18 to 20% of dip in most of the companies, especially the defense side taking a hit there. But from there, we have seen some strong recovery, 13% in this 1 week itself that the company has gained in. Garden Reach showing about 31% of growth in this 5 trading sessions. BML Masgaon about 18 to 26% growth. Over the 1 year, multi-baggers, just to look at the 1 year performance, so 200 to 181% of returns that we are looking at. So this has been the overall scenario. Local indigenization, increasing exports has remained the focus for these defense companies going forward.
Massive gains over there. Thank you, Anushi, for that very comprehensive sort of picture on what is happening with India's defense sector. It's not just one order here and there. It's a continued and very focused approach to increase the scope of the sector, and now on exports. That's where the focus is. Now, keeping it with defense, we also spoke today to Midhani's S.K. Jha. We were having an in-depth conversation, and you should catch that entire conversation online, because we also had Prabhudas Liladhar's Amnit Anwani, who tracks the space. We talked to them about which are the companies that would do well if the focus is on defense exports. Listen in.
There are indications that coming from the international market it is possible to do. Only the issue today is that how quickly you can execute the orders, because these orders are not going to stay for the long time. People are looking for the very quick delivery, and that is where the main challenge lies, that how quickly you are able to get the order and execute very fast. I am talking about in terms of the materials, not in terms of the platforms and all, which takes a lot of time. So that segment is very, very now, like I'll say, a good opportunity in that segment. It is very conducive for the Indian exporter, Indian manufacturer.
There has been a context set over past 5-7 years, and we can expect the policy continuity. And as far as I recollect, in DAP, DPP, the policies which came in for defense, we were targeting about 35,000 crore kind of export by FY26, and roughly about 1,75,000 crore revenue by domestic defense companies by FY26. So now coming back, I think the export has been predominantly on the supply and component side rather than the platform related things. So I think largely this might be benefiting to the many MSME companies, private companies, which have been exporting, and including Paras, Astra, and maybe data patterns in that aspect. So I think there's a few companies, not in my coverage, but I expect this is the defense export boom.
All right, let me just get a quick view from Aditya Agarwala and Vineet Bolinchkar on the whole defense story that we're talking about. And Aditya, I'll come to you first. Let's start with HAL. And then, look at some of the absolute sizzlers like Paras Defense, etc. Do you think more left, or this is the time to book profits?
Not at all, Tamanna. I think there's more left in it, and I can add a couple of more names to the list if you want. Talking of HAL first, I think so, yes. Let me put a disclaimer also that some of these stocks might be recommended to our clients within the space. So HAL, I think so, still there is room on the upside. After that sharp fall we have seen post the election results, I think it's breaking out now from an all-time high territory. So 6,000 on the upside, I think so, is very much possible on HAL. On the downside, 5,200 is a good support area. So look to add the stock on declines if you don't want to add at current levels the entire position. Talking of all these companies which are seeing a 15% kind of an upper circuit, predominantly Paras Defense, past 2 trading sessions, we have seen 40% of kind of an up move for the stock, back-to-back 2 circuits. At current levels, if I want to get into the stock, I would not look at getting into the stock. Tamanna, at current levels, I would wait for a decline. If you already own the stock, it's not a bad idea to start trailing your stop losses, or maybe book partial profits. Because I don't know, fundamentally what's the development here, but looking at the chart setup, they are all sitting at extreme overbought levels. though there is good volume activity, which is backing the up move, but then there's no harm in taking some profit off the table if you're getting 50, 60, 70% kind of an up move in a couple of trading sessions or 3 trading sessions. Two names which I think still makes the list for me. One is Axis Cade's stock, again, though is up 15% in trade today as we speak, but I think there is enough room on the upside still left in the stock. It's still just crossed its 200 DMA. I think with this can still be bought at current levels with the stop loss just around 570, 565 odd levels, and stock can easily test levels of 800, 850 on the upside. The second stock is Data Patterns. I think so this is also looking very interesting. So I'm moving out from the predominant plays within the defense to a couple of names which are not usually spoken of. So Data Patterns also I think is something that can be looked at. It looks very interesting. 3,000 on the upside is a good support area. On the upside, 3-4 to about 3,500, 3,500 can be tested. So both these stocks, Data Patterns and Axis Caves, I think so look good to me for a fresh entry at current levels.
No, that's excellent, Aditya, because we already have the, I would say, the usual suspects have already run up so massively that the street and viewers are looking for new opportunities. Vineet, what's your take on the whole defense play? Is this just the beginning that we are seeing?
No, I think the valuations are stretched, but in terms of HAL, I believe that the incumbent order that is going to come, because he's the only monopoly play for aircraft and helicopters. So I'm seeing his order book grow to about 150,000, 160,000 crores in the next 2 to 3 years. And when you take that order inflow, which is obviously going to happen, then you find that the stock at 5,500 is going quite cheap. And then, you can keep buying. But, there is a lot of, the safety modes are not there anymore.
Safety modes, particularly that these high valuations might be missing. Okay, let's just take a very quick break. But before that, the flashes on your screen, the stock is down about 4.5%. Jubilant Pharma Nova. US FDA has completed the audit at manufacturing facility in Canada, has issued 15 observations. 15 is a large number. I don't quite know the seriousness of these observations, but at some point of time in the show, we'll try and discuss that as well. But for now, the stock is duly reacting, down about 5%. Time for a break. On the other side of the break, we're joined by the management of BLS Services on a particular piece of news that they've come out with. Stay tuned.
Focus this afternoon on BLS Services. Shikhar Agarwal, chairman, is joining us. That stock has been up today on a particular piece of news, which is that BLS Services, which is a subsidiary of BLS International, also listed, is acquiring 55% stake in Adi Fidelis Solutions Private Limited for an all-cash consideration of 190 crore rupees. What does Adi Fidelis do? It's in the business of distributing and processing of loans for corporates and individuals. Shikhar, very good afternoon to you and thank you for joining us here on NDTV Profit. Let's talk about Adi Fidelis, what it does and why BLS Services wants to acquire it.
Yes. So Adi Fidelis is a company that was incorporated in the year 2018 by ex-bankers, and the company, what they primarily do is it is in the distribution and processing of loans for corporates and individuals. They have a network of around 8,600 business partners across 17 states in India, and they provide different kinds of loans, like loans against property, personal loans, credit card loans, and working capital loans. They work with all major, distributors, banks like ICICI, HDFC, Axis, Bajaj Finance, Tata Capital, all across India. And the company also has interesting financials, unaudited financials for the last year. They did a revenue of around 570 crores and an EBITDA of 22 crores. So there are a couple of reasons that we bought this company. I think BLS Services already has a big network of around 100,000 centers spread across India, and they have 600,000 people that come in daily. So I think we can cross-utilize our existing network to grow this company further.
And what is the kind of contribution you see to your financials, Shikhar? Because I'm just looking at your Q4 numbers and profits were hit in Q4. Profits were down 57%. Would you like to address that as well? And how do you see Adi Fidelis coming in? I know the transaction will be completed only by Q2, but how does it contribute to the financial picture?
So if you see the full year revenue and profitability of BLS Services, we did a revenue of around 300 crores and achieved an EBITDA of 46 crores, which was a growth of 50% compared to last year. So definitely, we are acquiring 55% stake in this company. Rest will be still retained by the management, which will continue to run the company. I think the profitability, EBITDA of 22 crore was achieved last year, March ended. We expect further growth of 15 to 20% on this numbers organically, minimum level coming in this year. Further, after we acquire this company fully, we will utilize our big reach within India to grow the company further. So definitely we feel that this will add a good amount of revenue and profitability to BLS Services, which will lead to a further growth in the company.
Shikhar, hi, Niraj here. Just one question. When I look at what the numbers have looked like, you've been steady on the top line and the EBITDA numbers, at least the reported ones, right, on a consolidated basis. You reckon this is what is needed to prop growth? And independent of what you do with this acquisition, what is the growth rate target like over a 3-year period for BLS Services?
See, in earnings, if you see, we have grown from 243 crores to 300 crores last year in terms of revenue. Profitability has grown 46%. So we grew 50% at the EBITDA level. Definitely, we would want to grow very fast in BLS Services because the potential is huge. After acquiring this company, that will be one of the only levers, that comes from acquisition. But organically also, we have added majority of banks in our BC business. We have started loan dispersal for major banks like HDFC, Axis Bank. Our reach has grown now to 25,000 business correspondent centers spread across India. More products have been added. We have added e-governance opportunities in different states. We have added Aadhaar work also. So this is only one of the elements that will lead to growth, but other elements like the increase in contracts from the existing customers, adding new customers, increasing the product portfolio has all been implemented, and that is also happening parallelly. So I will say that combined growth will come from all the different factors.
All right, Shikhar, thank you so much for speaking with us. Shikhar Agarwal there, Chairman of BLS Services on their new acquisition. Remember, this company is in the business of e-governance and works with the states of Punjab, Uttar Pradesh and West Bengal. So they provide e-governance here, assisted e-services to citizens as well, and they are business correspondents to major banks including HDFC. Stock is up about 7.5%. Aditya, I'm not sure if you track this company at all, but if you do, any views here?
There's a good bottom picking that's happening in the stock, Tamanna, and good volume also today. Stock is up some 7.5%. Not a bad trade above 292. Let it cross 292 levels, then maybe I'll buy in a stock for a target of at least 330, 340 on the upside. On the downside, 280 is a good support area.
All right. So that is the story with BLS Services. Let's take a look at what is also exciting today in the markets. And, Niraj, you were talking about financials. Financials definitely on top of the radar. But I don't know. I wanted to know Vineet's view. If there is any new position you would create right now. And have you already started making your budget shortlist?
So I think fertilizers is a very interesting play out here.
Okay.
I believe that we might see this if natural gas is included in the GST, then that can spur some working capital gains for these companies because the raw material becomes cheaper, the pricing becomes cheaper and subsidies also get less. So it's comfort for both the manufacturers as well as the government to subsidize the market. And I find these stocks very, very cheap, particularly GSFC. I've spoken to you earlier about this stock also. I think there is a lot of value on the table compared to the risk that you're taking. I think the risk is negligible. I think 10-15 rupees max with an upside of around 100 rupees. So I guess that GSFC is a very, very good pick with good safety modes. And fertilizers are some of the stocks that you can buy.
In fact, FACT also doing very, very well today. Aditya, just on the fertilizer stocks, since Vineet talked about them in the context of the budget list, etc., any that you would pick up right now at these levels?
Maybe a Deepak Fertilizer, Tamanna. Risk to reward looks interesting to me on that. A few of the names that you spoke of have already shot up. Deepak Fertilizer to me stands out because there is yet to see a move on Deepak Fertilizer. So maybe for a target of 720 on the upside, 710 to 720 on the upside, I'll go for a long trade with the stop loss just below 600. So the risk to reward is extremely in favor of going long in Deepak Fertilizer at current levels, and that is something which is looking really interesting.
Well, stay on with us, Aditya and Vineet. I'm going across to Agam now, who's breaking down all the F&O cues for the day. Agam, it's seeming quite positive overall on the Nifty. We're sticking above 23,500 levels comfortably. And do you see that trend continuing?
Yes, always a positive, isn't it? When you move above a certain mark and sustain above that. And I reckon a lot of technical analysts will agree with me when I say that, the sentiment, at least as far as the benchmarks go, remains positive. Now, there are all sorts of questions being thrown when it comes to valuations in a lot of these stocks. But at the moment, it does seem like price action is taking precedence. Now, even if you consider the open interest in terms of the Nifty, we're once again looking at another day where we see more positions being added, even as the Nifty advances by another 0.4% in terms of the underlying. The Bank Nifty, again, now moving well above the mark of 50,000 and sustaining above that mark. Remember, tomorrow is the weekly options expiry for the Bank Nifty, so we may most likely see some choppiness return to this particular index, as has been the case for the last several weeks. But we're seeing about another 5% added there as well in open interest. This is, of course, the June futures. Moving on to talk about the Nifty 50 overall open interest. We have largely hovered around 23,500, and that's exactly where we've seen a lot of traction with respect to calls and puts being written, as you can see on your screen there. In terms of your overall open interest distribution picture, at the moment, it does seem like it's a roughly 1,000 odd point range because of accumulation, the 23,000 put and the 24,000 call. But a lot of traction once again on expected lines around the 23,400, 23,500 calls as well as puts. As far as the Fin Nifty is concerned, again, we haven't seen as much in today's day of trade. The likelihood of it moving and hovering around 22,400, that's exactly how things are panning out at the moment. Of course, 22,550 odd is where we're seeing a substantial amount of traction coming in today's day of trade. And finally, to talk about stocks, let's pull up that list And there we have it. So, well, longs in Alchem Lab and Canfin Homes. Canfin Homes clearly the stock of the day today, considering the kind of longs that we have seen. And among stocks which are seeing unwinding, let's pull that list up as well. Short covering for MGL, Interglobe Aviation. Not too much to speak for otherwise because the underlying is relatively lackluster. But there are plenty of stocks still, even beyond the F&O segment, which continue to track and will track positively. That perhaps is adding to the positive sentiment at the moment.
Okay. Well, thanks a lot for that, Agam. So watch out for some of those names. Now, before we move any further with our guest, let's get you an important global opinion as well. We spoke to ACE emerging market investor Mark Mobius over the weekend. My colleague from NDTV, Gauri Trivedi, started it by asking him what impact would Modi 3.0 have on Indian markets and what lies ahead. Listen in.
We were all very excited to see him come back because he's done so much for the Indian economy. Of course, he did not get the expected amount of seats to change the constitution, but that's fine. I mean, it showed that Indian democracy is working, and I think that's a good thing. And I think it's also good that he has to make amends and make agreements with the opposition, which I think is healthy for the country. So I think everything is going very well. I think India will continue to go from strength to strength.
Indeed. And in Modi 3.0, Mr. Mobius, the focus is largely expected to be on growth and development. But I have to ask you this. You've been tracking emerging markets for almost 6 decades now. What do you think is India's secret sauce towards becoming a superpower? What could that be?
Well, the first, most important key source is the Indian people. You have a young population, average age, about 26, 27. It's a huge population, over 1 billion, the largest now in the world. An incredible number of people speaking international language, English, which can absorb a lot more technology and do more globally than perhaps any other country in the world. And then you have this incredible variety of outlooks and cultures with the different states, which I think is a big, big strength for India because you have the different viewpoints, different ways of looking at things, and that is very important. And then, of course, out of this has grown the interest in technology, which Modi is promoting, the digitization of the economy, which is accelerating growth in the country. So all of these things put together make for an interesting and very optimistic outlook for the country.
Technology definitely is important, but before that, I want to ask you about infrastructure, because that's been the hallmark in the first 2 terms. In the last 10 years, we've seen major infrastructure push. Do you expect that to continue?
Of course, infrastructure is one of the drawbacks and one of the problems that India faces because the movement of people from the rural areas to the urban areas and the general, the enthusiasm of the young population is moving ahead of the infrastructure. So the country has to move very quickly to move the infrastructure forward and improve infrastructure. And that includes roads, it includes railroads, it includes power. I mean, India needs more and more power and power distribution. So all of these things must be accelerated. And I'm happy to see that a lot is being done in that direction, but more needs to be done. It's quite a big task.
Okay. Well, that's the global opinion, of course. Now I'm trying to see what else has moved. So in the last few minutes of trade, Mazagon Dock has hit an all-time high of 4195. I need to bring this up. It's up about 8% after the kind of move that Mazagon Dock has had. So watch out for that one. There is Carborundum Universal, which is not up as much as Mazagon Dock, but has gained about 3% from day's lows. So that's something that you should also watch out for, Carborundum. So that stock too has done well for itself. Arvind Fashion has recovered a little bit from the lows, so that's the other one that you need to watch out for. Triveni Turbine recovering from the lows, watch out for that one. So those are a few names that clearly stand out for me. Aditya, if you were long on these names, would you do a PTSD on, let's say, a Mazgon or a Garden Reach Shipbuilders? Would you carry home the longs for a quick trade tomorrow?
Maybe on Mazgon or Niraj, yes, I could carry, because clearly there is a lot of momentum which I see in a lot of these stocks. We just spoke about these stocks like few minutes back, and they all are trading at days high. So maybe I will continue to carry Mazgon for a target of 42.50 on the upside. Alternatively, if somebody is looking, maybe still now Cochin Shipyard is something. I think if it's not locked on circuit, people can still look to buy Cochin Shipyard. I think it's locked on circuit. It's up 10%. But that is also something, if you continue, if you have, maybe you can continue to hold, carry on for a day trade as well, BDSL.
Yeah. The other stock that is really revving up, and if Vineet Bolinshkar is back, he had spoken about GMR Airports when it was 90. It was expensive to some people. It's now at 98, up 4%. Has really revved up. Vineet, you had liked it then. It's now closer to a target that some of the other, or rather most of the brokerages have. What is your view for somebody who's missed out on this story? Is it a good enough investment candidate currently at these valuations, GMR Airports?
I think if you're a long-term investor, you should continue with that, because you don't see, typically brokers give targets for a year. Now you may be near the target, but on a 2-year or a 3-year basis, the profit acceleration is much faster. So I wouldn't be surprised if the stock does 110, 115 in this fast market.
It's Vineet wearing a tactical trader's hat in addition to being the HR that he is. Vineet, excuse me if I'm getting your designation wrong, but he looks at stocks fundamentally very, very closely. But he's wearing a tactical hat right now and telling us that he won't be surprised if it hits 110, 115 in a fast market. Do the charts suggest that, Aditya?
Yes, Niraj, actually I have a same target of 110 on GMR Infra, and I was about to talk about GMR actually sometime back. Definitely it's a buy even at current levels, I would say. Clean breakout from a consolidation pattern, 95, 94, good support area, 110 is your target area.
Yeah, well, suddenly this term multi-year breakouts has become fashionable. It's happened with GMR, it happened with Motherson, Samvardhana Motherson at 125 or thereabouts, and from there Samvardhana Motherson is now probably at 180 or thereabouts. So some of these stocks are really revving up quite materially. This is a 12-month chart. Samvardhana Motherson at 180. I think the multi-year breakout levels that I had heard sometime back was about 124, 125. From there, it's really shot up in trade. Okay, well, we're talking about transportation, airports. Can't not talk about the biggest IPO, or likely the biggest IPO. We don't know the sizes yet, but Hyundai announced the IPO on Friday, and we've covered the details about the IPO. But let me get in my colleagues to try and talk about what is it that should matter to a viewer. Now, first, the key details and the operating metrics. Tushar joins in for that. Tushar?
So the IPO that we are talking about, the Hyundai India IPO, can potentially be India's largest, as you mentioned, and in the sense that it eclipsed that of LIC a few years ago at more than 20,000 crore rupees. The valuation could be around 1.75 lakh crore to about 2 lakh crore. That's also what we are hearing from the sources. Now, essentially, how big is Hyundai in India? As far as operating metrics or the numbers are concerned, the company was made about 60,000 crores in FY23, and in the 9 months of FY24, it made about 52,000 crore rupees. That compares with Maruti's about 1.03 lakh crore in the 9 months of FY24. The company, however, enjoys a higher EBITDA margin than its larger peer as of the 9 months that were there, the 9 months of FY24. The operating metrics in sense of production, Hyundai produced about 8 lakh cars last year. Maruti produced produced about 19.5 lakh cars. Domestic sales are more than almost 3 times. Maruti enjoys almost 3 times the sales of Hyundai. Exports are at about a third of Hyundai's total volumes, but they're still smaller than Maruti's 2.8 lakh units. The company has also spoken about the hybrid phenomenon that is happening in this space at this point of time. It has actually opposed the idea of a differentiated taxation on hybrid cars. That's a lower GST as compared to petrol and diesel, saying that it will hurt the sales of petrol and diesel cars as well as affect the transition to electric cars. Remember, the company is now looking to launch at least 4 electric cars going ahead, including a mass market model as well as an electric version of the Creta that will launch in the 4th quarter of FY25. So essentially, we are looking at the biggest IPO, a landmark IPO, so to speak, because the first in nearly 2 decades, and also shows that a foreign car maker can actually survive in the hyper-competitive market that is India, where actually Ford and GM have actually exited the space because they couldn't catch up to it.
I found that interesting, that last bit. And Niraj, this was quite rich. I was talking to Tushar about it. So Hyundai, in its filings, in its official papers, has said that they're opposing any kind of tax breaks on hybrid vehicles. And all your other major OEMs are also doing that. But they're also launching EVs and hybrid vehicles. But they're saying don't give tax breaks because it will hit sales of petrol and diesel.
Yeah, because only the Japanese car makers are doing the hybrids. The rest of the clan is out of the picture. So therefore, the Toyotas of the world certainly want that. The Maruti certainly wants that, tax breaks. But M&M, as well as the others, are firmly opposed to it.
Is anyone thinking about actually having cars on the road that pollute less, and how you will have to incentivize people? Why will I pay 20% more for an electric vehicle or for a hybrid vehicle unless I have some tax incentive?
Yeah, or you do the math over a 6-year period, how it may break even based on how much you ride on a particular given day. But as Tamanna said, auto giants, but it's not just auto giants which are talking about this. Ancillaries too are vrooming in tandem. Fiem is one of them, but I'm sure there are others. I spoke about Samvardhana Motherson having a multi-year breakout too. So let me get in my colleague Puneet, who joins in with more information about which auto ank is in focus because of this drive. Puneet.
Well, thanks for that. So Fiem Industries is one of the ones which are racing ahead in trade today. Volumes are also up roughly nine times its 30-day average on a block deal, as well as intraday high of roughly 9%. Now, we just wanted to talk a bit about what the company does. Q4 for the company is essentially an automotive lighting as well as signaling equipment, as well as rear view mirror company in India. It operates majorly in the two-wheeler space, where it has roughly 90% of revenues coming from the two-wheeler giants. We look at the company in more detail on the Q4 numbers for the company. We saw that roughly 20 to 25% growth in revenue as well as EBITDA was seen in Q4 as well as financial year 2024, while margins came in at a strong 13.4%, while slightly lower compared to the same time last year, but this was due to a one-off. Well, the company has been guiding for a better next couple of years, seeing the recovery in the auto OEM space. We've also seen that, within its FY24 breakup of revenue, automotive lighting is roughly 34-35%, while its LED lighting business, which has been taking off, has been roughly at 37% for the company. Rear view mirrors, which is a newer division for the company compared to its lighting, has been gaining share of roughly 12% of its total revenues. But let's look at what are the key positive and why should you track the company going forward as well. It's recovered roughly 66% of its revenues from the COVID lows, while analysts also have 3 buy calls and 2 hold calls, with Equirus having the highest target price of roughly 1,507 rupees, which is a 12% upside. Batliwala and Karani also has a 1,366 rupees price target. Apart from that, as we spoke before, it is a leading two-wheeler auto ancillary company, having roughly 95% of its revenues coming from the likes of Honda, TVS, Yamaha, Suzuki, as well as Royal Enfield in this particular space. And companies' ROE as well as ROC has been really strong, upwards of 20% for the last couple of years as well. Finally, its dividend policy has also tripled since FY20, and the company is net debt-free. In its conference call, it also mentioned that positive outlook with higher premiumization and higher content per vehicle will be one of the key positives for the company. Back to you.
Oh, thanks for that. So some interesting names, and we'll talk to Vineet and Aditya about these. But we also spoke to Vikas Prasad, the of MNG Investments, who believes that growth in two-wheelers will exceed expectations and there is more money to be made in the auto sector. Listen in.
Auto is broadly defined as the largest allocation that we have. OEMs, ancillaries, and I would include in that companies like machine tool companies, forging companies. It's a broad universe, and so private sector banks has increased, defense has decreased, but then the auto universe broadly defined in India is very exciting to us. And we continue to find ideas on a weekly, monthly, quarterly basis as we scour the country for ideas.
Okay, now Vineet, if you had to bet on a favorite within autos / auto ancillaries, what are those one or two names? Do you like anything?
So we like Minda, Minda Corp, Samvardhan, Samvardhan. So these are some of the names that we like.
Why Samvardhana Motherson, Vineet? I mean, of course, the business is known, but the stock has rallied quite materially. Are valuations a bit stretched for Samvardhana?
No. They're not even, the story is not even being captured. And what you see, what I like best about it is that the OEMs actually tell Samvardhan Motherson Sumi to go and acquire a particular company which is turned sick, because they believe in their turnaround abilities and all the business comes to them. So right from day one, they have capacity utilization. They are able to put in their efficiency into the business, and they get a huge tax shelter also on that.
Another segment which is looking interesting this afternoon is your consumer durable play. Look at your Kajaria, Cera, Century Ply, V-Guard, Voltas, Whirlpool. Just pull up some of those and you see what kind of an up move. Now, it's going hand in hand with real estate stocks also doing well. And, real estate adjacent companies is not something that we've been looking at closely enough, perhaps. Vineet, any take on this segment, on all your sanitary ware, ceramic kind of players? Havells, maybe I would add in that as well.
Yeah, so along with the theme of, the natural gas prices expected to get added to the GST, if that were to take place, then all these stocks will start moving up. And, from these current levels, they're a low risk buy because they've not participated in the rally to the extent that the others have. So these stocks definitely provide margin of safety with significant upside.
Okay. And, some of those auto names certainly up and about. Aditya, Samvardhana Motherson or an Uno Minda or a Fiem, anything that stands out on the charts?
Yes, so both Samvardhana Motherson definitely stands out. Even Fiem Industries looks very interesting to me on the chart setup, Niraj. And these are some of the stocks which most of us have spoken out. One stock that I would like to talk about is Mayur Unicoaters. This is again, you can call it an auto ancillary. I think they are into upholstery manufacturing for car seats. So this is very interesting on the chart setup. Good volume activity that I'm seeing for the last few trading sessions. It's broken out from a major trend line resistance as well. So on the upside, I think so 750, 780 could be seen if somebody wants to hold on to it for at least maybe a quarter or two. On the downside, 590 to about 600 is your good stop loss. Because I'm having a larger target of 715 plus, I think so one should have a deeper stop loss as well. And so this is one stock that is yet to give that kind of an up move. But I think one should look at the stock definitely from a portfolio position. Apart from that, yes, as I mentioned, Samvardhana Motherson is something which is a buy on all declines because it's a very strong looking chart setup. On the upside, 200 to about 210 is something that I think is possible.
Samvardhana looks good as well. What about a Varroc? Since we're talking about this space, Aditya?
So I did see a good build-up last week, Tamanna, as far as Varroc is concerned. I think good volume also happened there. So one can look at Varroc Engineering as well. On the upside, I think so 800 is something which looks very interesting to me on the chart setup. So all these stocks have broken out from a multi-year, as Niraj was pointing out some time back, from multi-year consolidation, multi-year highs. So it looks like they have more room on the upside and can definitely see higher levels. More of positional trades, Tamanna, these stocks one should definitely look at.
Okay. Speaking of block deals, by the way, just before we start wrapping up the markets, Fiem had a block deal. Quick Heal had a block deal. Quick Heal is up 10%. Very likely interstate promoter transfer is what I'm picking up from people. But look at Quick Heal. That stock is up 10.5% today, 524 and counting. Usually not a very well-traded stock. Okay, I mean, the volumes are quiet. But today, certainly fairly high volumes, almost nearly 0.8 million shares on the NSE. So good volumes here. Vineet, do you track Quick Heal by any chance?
No, we don't track it. We don't track that stock.
Okay, yeah, I mean it's not a very well traded stock, but it's up on very high volumes today. Aditya, any thoughts here? If you can look up the charts for me, please.
Yes, Niraj. In fact, this is one stock which I also looked at after you mentioned as what a wonderful rally that I've seen from May 2023. After that, a consolidation, and again today up on good volumes. I think there is more room on the upside. Definitely, it took support at 200 DMA, and from there it's up and up over its recent highs. I think so. 590 to about 600 is what I'm eyeing on the upside. 500 should be a stop loss. Looks very interesting to me with the kind of volume and the supports that the stock have taken.
Another space that we should quickly look at, and leading with Dr. Reddy's, Zydus actually as well, is the pharma space. Citi report today talking about how prices have dropped 24% between April to June in the US. Companies are facing price erosion, and those, of course, with larger exposure to bulk drugs and generic space are aching the most. Dr. Reddy's came in for more of a concern even from a Jefferies note. So that's talk about 1.5% down. But Vineet, do you think that is a bit of a contra view here? Because if you're looking for a rotational defensive play, then pharmaceutical companies are definitely on the radar.
Definitely. So I think one counter which comes to mind and which is not on everyone's dish is Wockhardt Pharmaceuticals. So I think Wockhardt, there's a lot happening out there. We believe that their present incumbent business can grow by 50% over the next couple of years. And to this, you add the optionality of the NCE molecules, which are looking very, very promising from the antibiotic space. So I think this is one of the stocks that you can look to buy, where we believe that there's a lot of good story unfolding over the coming few days.
WCK something. That's the name of the drug that Wockhardt is betting big on. Let's see how it transpires. But Vineet, Aditya, gentlemen, thank you so much for taking the time out and being with us today. Really appreciate your time this afternoon. Okay, let's start wrapping up the markets. Less than a couple of minutes left. And the markets, fine fettle, you have to admit, nothing dramatic. But the Nifty Bank really powering the indices higher, and which is why we close nearly at the high point of the day. 0.43% or thereabouts, certainly for the banks at the high point of the day. Get the heat map up on the screen on a day when the market breadth has been okay. A lot more green than what it was about an hour ago. Reliance in the green as well, by the way, so bear that in mind. But the winners are the financials. Look at Shriram Finance, ICICI Bank, both of them well and truly in the green, and HDFC Bank giving company, HDFC Bank and SBI, an access to this troika nearly 1% higher. There is Wipro, which is up about 3%. Adani Enterprises up 1.5%. There is Tata Consumer, Adani Ports. So that's the mix of stocks really. A broad brush, but with financials standing out. A little bit of support from IT majors such as Wipro. What's not doing well? Maruti, courtesy, of course, the news that we spoke about just 15 minutes ago, and the valuation that maybe that Hyundai is coming out with, potentially coming out with. Dr. Reddy's, because of all that thing around US pricing, and to an extent, metals have taken a bit of a backseat with both Tata Steel and Hindalco looking wobbly in trade. But broader markets, a buzz, defense, a buzz, auto ancillaries, a buzz, massive gains there.
Zabaz, you've had a good kind of trade in quite a few pockets today, Niraj. I would say the mid-cap 150 about 0.5% up. Let's pull up the small-cap index, also 1% up. So you're ending, strong. I also want to pull up what your top losers and gainers are on the BSE 500. That will give you a sense of what has worked today. And Cochin Shipyard up 10% there should not surprise you at all. You were talking about, Auto Angst, Motherson Sumi also doing very well. Mazda once again 7.5%. I just want to see what Paras Defense is closing at. I think 20% circuit will be there as well. So on the losing side, I think largely your chemical stocks have seen a bit of pain, which they continue to do. A lemon tree has crept up into this chart as well. Yeah, Paras is closing 20% up. Zen Technologies, BDL, BEL. That story just continues unabated, with of course HAL being stock of the day after a huge 45,000 crore rupee order coming in from the Indian government. A couple of things that I would watch out for tomorrow as well as we wrap up. There is a Cabinet Committee on Economic Affairs meeting tomorrow at 5 p.m. What that agenda is will be important to see, because this is the big driver, at least up till the budget, as far as the markets are concerned. But suffice to say, we're closing above 23,500 levels very, very comfortably. So we're starting off the second day of this truncated trading week in a strong position.
Yeah, it'll be interesting to see what's happened to the 23,500 calls. So I think we'll do some analysis on that tomorrow morning. But for now, from Tamanna and me and the team that has put this show together, thanks so much for watching. But stay tuned to NDTV Profit for all the news and updates.
the markets extend its record rally for the fourth session, financials continue to contribute the most. Broader markets join the rally. Modi 3.0's Committee on Economic Affairs is likely to meet tomorrow. The meeting will primarily focus on India's goal for achieving a $5 trillion economy. Google Gemini's advanced chatbot app is launched with 9 Indian languages. Paras Defence, Garden Reach lead the rally in the defence stocks at 34,000 crore rupees to the investors' wealth after government pledges to increase sectoral exports. Cumulative market cap of defence stocks rises to over 11.5 lakh crore rupees. Som Distilleries cracks in trade on allegations of child labour in its liquor factory. National Commission for Protection of Child Rights says it will issue a notice to the Madhya Pradesh government. Good evening and welcome. You're watching NDTV Profit and this is The Reporter. I'm Nupur Talwar Suri. We, of course, will have a roundup of all the national and international news, but we begin with how the markets have performed today. The Nifty and the Sensex seemed to have extended their record rally to day 4. Niraj joins us. Niraj, markets extending their rally today. Give us an update.
Above 23,500, that's the big headline from today's session because the index managed to end close to the day's highs, led by the banks. They weren't doing the best at the start maybe, but I think towards the close, the bank Nifty did really well. Financials at large did really well because some NBFCs also participated, as a result of which 5440 on the Nifty bank. The broader markets were okay, not the best today relative to what we've seen, still in the green. So the breadth was still positive, but nowhere as good as what a 1% uptick on the small cap index would suggest. So that's the key part. Now, bring up, this is the breadth, and look at it. It's a very steady move today on the market breadth. Bring up the heat map on the Nifty, though, a lot more skewed towards the gainers, and financials leading the pack. So there is Shriram Finance, which is the top gainer. There was ICICI Bank, SBI, HDFC Bank, Axis Bank, this Troika. So all of them participating and giving that bit of support to the index. Wipro had a specific news flow to itself, and that was amongst the top gainers, as was Power Grid. And the Adani twins, Adani Enterprises and Ports, also ending in the green on the back of news flow. What didn't do well? Maruti, and possibly because of the Hyundai IPO valuations, presumably Maruti sulking a bit in trade. Dr. Reddy's, by virtue of all that's happened in the pharma pack, in the US on the pricing front, reeling a bit, and commodities, particularly metals, took a bit of a backseat today with, I think, Hindalco and Tata Steel, and even non-metal commodities, the likes of Ultratech, etc., came off a bit. The broader end of the spectrum was marked by defense and auto ancillaries in the session today. So if you just look at the BSE 500 or the NSE 500, as the case may be, Cochin Shipyard, Mazgon Dock, both of them doing well. There was strength in metro brands. Asahi India Glass and Samvardhana Motherson came up, or Motherson Sumi came up in the list of the gainers on the gaining side. Some losers included the likes of Sumitomo, etc. But just before we wrap up, just that list of the stocks on the defense side which did well. Garden Reach Shipbuilders, Cochin Shipyard, Paras Defense, Zen Technologies, that whole clutch of names had a phenomenal outing yet again, and shows that people are betting on defense because of all that's happening in the ecosystem. And this one need not necessarily have a debt immediately. There could be still some more legs to the rally if today's numbers are to be believed.
Thank you for that. Now, here's an exclusive interview from NDTV Profit. Mark Mobius, founder of Mobius Capital Partners. He explains why India needs a big push towards infrastructure.
Infrastructure is one of the drawbacks, one of the problems that India faces, because the movement of people from the rural areas to the urban areas and the general, how can I say, the enthusiasm of the young population is moving ahead of the infrastructure. So the country has to move very quickly to move the infrastructure forward and improve infrastructure. And that includes roads, it includes railroads, it includes power. I mean, India needs more and more power. and power distribution. So all of these things must be accelerated. And I'm happy to see that a lot is being done in that direction, but more needs to be done. It's quite a big task.
Around 39 boys and 19 girls were rescued from Som Distillery's liquor factory in Madhya Pradesh. Now, the crackdown was led by the National Commission for Protection of Child Rights, or the NCPCR. Som Distilleries has blamed the contractors of its associated company. Now, NCPCR will issue a notice to the Madhya Pradesh government regarding the incident. The shares of the company also cracked nearly 16% after the contractors came under police scrutiny. To discuss this further, we're now joined by Mr. Priyank Kanungu, the chairperson of the NCPCR. Now, Mr. Kanungu, good evening. Thank you for speaking to us. Now, to begin with, tell us what was found at the liquor factory and what is the kind of action that we can expect now?
We have received a complaint from an NGO, and I inspected the said premises, that is Som Distilleries Private Limited. We found about 50 children working there as child laborers. We rescued the children and we asked the state government authorities to produce them before Child Welfare Committee and lodge an FIR accordingly. So far, we have not received copy of FIR, but the officials informed us that an FIR has been lodged against Som Distilleries Private Limited, and the concerned district excise officer has been suspended by the order of Honorable Chief Minister of Madhya Pradesh. Now we are in the process of issuing a detailed notice to the Madhya Pradesh state government. After receiving the information and reply of notice, we will be able to authorize you to convey you the information and the latest developments.
All right, but the pictures that have come out from there seem to be extremely disturbing, given the facts that a lot of these children had burn marks on their fingers, and we are showing those pictures to our viewers. Your remarks on that?
Yeah, we are asking the state government to provide them medical aid and FIR against the appropriate section. FIR under the appropriate section against the perpetrators.
All right, Mr. Kanungu, thank you very much for joining us. So the Madhya Pradesh government has already been issued a notice by the NCPCR, and perhaps legal action will later follow. Now, defense stocks are on fire. While assuming charge of the Defense Ministry for a second tenure, Rajnath Singh set an ambitious target to export over 50,000 crore rupees worth of defense equipment by 28-29. I'm now joined by Anushi to break this down for us. Anushi, hi. Now, give us a sense of what you're picking up on this. And, of course, we are seeing stocks trade higher as well from the defense sector.
Well, defense sector continued its rally on Monday, again continuing the moves from Friday. Now, this was after Rajnath Singh has come out with its target to see more than 50,000 crore of defense exports by 28-29. Again, if you look at FY24 figure, 21,000 crore of defense exports, which has now jumped to 50,000 crore. So we are seeing some strong moves coming from the export side of the business. Even if we go back to some of the previous fiscals, this number about FY21, it stood at 8,400 crore, which is now jumped to about 21,000 crore. So we are seeing this 3x jump and continued, and the defense continues on its strong footing over here. Now, again, how the if you have to look at the companies, they have HAL has recorded about 7% of intraday high, Paras Defense about 20% of gains. But how the government's defense spending has increased over the years, FY25 in the union budget, we have seen an allocation of up to 6.21 lakh crore. So this was about 18% growth. Even in FY24, it had clocked in about 13% of growth. Defense budget as a percentage of the overall union government export expenditure has remained in the 13% range in the last 2-3 fiscals. Coming to company specific, if you have to look at the order book of these companies, HAL has HAL has seen about 13% of growth in its order book, while onto the stock performance side, it has seen about 13% return in just this 1 1 week itself, while in this 1 year period, it has seen about 180% of growth. Again, other companies like Garden Reach has seen about 200% growth, followed by Mascow about 240% and Bharat Dynamics about 172% in just this 1 year time frame. While in this 1 week, again, these companies have seen about 25 to 26% of growth. So strong trajectory going forward for these defense companies and strong export outlook considering the government's move to decrease the indigenization focus.
All right, Anushi, thank you very much for that. Moving on, Hyundai India is set to debut on the bourses, making it the only international OEM to list in India. Tushar Deep Singh has been tracking this story and he now joins us. Tushar, good evening. Now, Tushar, what are the key highlights of this IPO? Take us through them.
So, good evening, Nupur. So, very quickly, about 142, what is on offer is 142 million shares, equivalent to about 17.5% stake in the company. The IPO is a pure offer for sale by the South Korean parent, that is Hyundai Motor Co. The size of the IPO is said to rival that of LIC's IPO a few years ago at about 20,000 crore. That's what the sources are telling us. As well as the valuation could be anywhere between $25 billion to $30 billion. Now, in its DRHP, something unique that the company has pointed out is a transition strategy that Hyundai is adopting. One, it's actually three-pronged. One is on exports, second on EV, as well as on premiumization. So on exports, the company exports about 25% of its production in India. That will step up as more investment come in and the Talegaon plant goes on stream in the near future. In terms of premiumization, about 67% of the company's volumes come from SUVs. That trend is only going to gather steam as India buys bigger and larger cars going ahead. So well positioned there as well. And the third is on EVs. The company is going to launch about 4 EVs in the near future, including a mass market EV and the electric version of the Creta by the final quarter of the ongoing fiscal. Finally, one thing that also stood out that Hyundai is actually opposed to any specific hybrid taxation in India at about 5% or 12%. According to Hyundai, any revision or any tax breaks for hybrid cars would be a deterrent to the adoption of electric vehicles as well as affect the sales of petrol and diesel cars.
All right, Tushar, thank you very much for joining us and breaking that down for us. Let's in fact go across to Puneet, who's also joining us from the studio. And Puneet has done some number crunching, comparing Hyundai's IPO with the last auto IPO. Hi, Puneet. Now, Puneet, give us a sense of how actually the numbers stack up.
Well, just taking forward from what Tushar said, we want to compare it with the largest automaker, which is Maruti Suzuki. We look at the sales, Maruti is roughly 3 times that of Hyundai. But the interesting part is on the EBITDA margins front. It's roughly at 12.7% versus 11.6% for someone like a Maruti, 110 basis point higher, despite the number of higher sales and operating leverage benefit that Maruti gets. The other aspect is that despite higher EBITDA margins, Hyundai has a lower PAT. Now, there are like 3 key reasons when we look at the next slide that what are the 3 key reasons that form the profitability for Maruti higher compared to a Hyundai is, of course, firstly, the depreciation. The depreciation, we've compared it to the PPE, which is the plant, property, plant and equipment. They are roughly 26.5%. That is higher compared to Maruti. The other income part is also higher for someone like a Maruti Suzuki, which impacts the profitability on the positive side. And finally, on the taxes, Maruti has a lower tax to PBT ratio as well. When you look at the share of exports for someone like a Hyundai, now India's biggest PV maker has one of the highest share of export, of roughly 24% outside of India. I want to talk about Middle East and Europe, which is one of the key regions here. The share of it has doubled from roughly 6 to 12% over the last 2 to 3 fiscal years. They maintain market share in other geographies as well, but currently at 24% of exports, it is higher compared to a Maruti, which is at 10%, and Tata Motors and Mahindra at negligible 1 to 2% of export volumes. When you look at the ROE picture, that is again positive for someone like a Hyundai, coming in at 22% versus 15% that of Maruti. On the other key metrics, you will see that, someone like a Hyundai is slightly expensive, but we did a breakdown of, Hyundai's numbers. And if we take the same price to sales ratio of roughly 3 times and extrapolate it to the FY24 numbers, we will see that, roughly a 2 lakh crore market cap is what could be potentially of Hyundai. We do know that these are just indicative numbers from NDTV Profit. We still await the total fundraise as well as the number of shares. And that could lead to the current PE of roughly 36 times, which is slightly higher to Maruti's current PE of roughly 29 times. Going forward, the electrification and premiumization theme could benefit someone like a Hyundai Motor Corp.
All right, Puneet, thank you very much for joining us, in fact, and very comprehensively comparing the two top leaders in this segment, that's Hyundai and Maruti. Moving on. Now, the first budget of Modi 3.0 is expected to be presented in the third week of July. We at NDTV Profit decided to start a series of video explainers that help break down the budget. Jargon for you. Today's jargon is interest subvention. Take a look.
Let's say you're a farmer with a bank loan of 1 lakh rupees at an interest rate of 10% per annum. If the government announces an interest subvention scheme of 3% for farmers, what does this mean? It means that the government will pay 3% of the interest on your behalf. This reduces your interest burden to 7%. Why does the government provide interest subvention schemes? This is done to encourage growth by lowering the cost of borrowing. Sectors like agriculture, education, and small businesses especially benefit through these schemes. Interest subvention schemes also reduce financial stress by making loans affordable. Currently, the government provides interest subvention to small and marginal farmers. Loans taken by them to store agricultural produce after harvest. These loans are subsidized with 1.5% interest subvention. The government provides this relief through NABARD.
Well, you're watching NDTV Profit. We slip into a very short break. On the other side, we bring you more news, including more details on what's expected on the government's first CCEA meeting. Welcome back. You're watching The Reporter on NDTV Profit. Now, inflation is another pain point for our economy. The industry-wise price hikes were witnessed in FMCG products. NDTV Profit's Mahima is here to break that down for us. Mahima, take us through the various price rise that we are going to see in FMCGs, essentially their goods.
Right, so various FMCG companies have hiked prices for their home, personal care and food and beverages products. Now this price hike is at the time where retail inflation is showing signs of easing. CPI in May stood at 4.75 versus that 4.83 in April. Now in terms of different products and price hikes by various companies, in terms of home and personal care, soap saw a price hike of 4 to 5% by Godrej Consumer Products, and Santoor and Dove prices rose by 3 to 2%. In terms of body wash, well, Colgate Palmolive saw an increase of 9% and HUL raised its price by 4%. Now, in terms of detergents, various companies like HUL, Jyoti Labs, Procter & Gamble raised their prices between 1 to 10%, and HUL and GCPL also increased their select liquid detergent SKUs by 9% and 5% respectively. In terms of oral care, HUL hiked their price by 6 to 10%, and Pepsodent and Close-Up saw this kind of price hike, and Sensodyne also saw a price hike of 4 to 5%. In terms of shampoos, HUL saw 2 to 6% price hike across its portfolio, and L'Oreal saw a total price hike of around 5%. In terms of skincare, HUL implemented 3 to 4% price hikes across various skincare categories. And lastly, in hair oil, Parachute Coconut Hair Oil saw 8 to 11% price increase, and Marico's Nihar Amla saw an increase of around 8%. Now, coming to food and beverage segment, well, tea and coffee, tea prices have remained unchanged. However, coffee, Nestle hiked price between 18 to 13%. Hindustan raised its price hike between 4 to 5%. In terms of dairy, Nestle raised its A+ toned milk by 5%, and health and food drinks, Horlicks and Complan saw a price hike of 3 to 4%. In terms of carbonated soft drinks, well, Coca-Cola increased the price of 750 ml by around 13% for Thumbs Up and Coca-Cola for certain SKUs, of course, and Tropicana Slice price went up by 5%. Lastly, in terms of staples and noodles also, there was price hikes which was seen. So this is the overall view of how FMCG companies have hiked prices of their personal category in food and beverage section.
All right. Thank you for that, Mahima. Now, the first meeting of the Cabinet Committee of Economic Affairs will take place tomorrow. The primary topic of discussion is expected to be the goal of achieving a $5 trillion economy. Sunil Prabhu from NDTV now joins us, and he will be taking us through the most anticipated discussion points for this important meeting. Sunil, tell us more, please.
The first time, this is the first Cabinet Committee on Economic Affairs, apart from a cabinet meeting. The cabinet meeting also expected to clear the speech for the president to address both houses of parliament, apart from other agenda. On the Cabinet Committee on Economic Affairs, as you rightly pointed out, the focus is on the 5 trillion economy. There is a clear vision that Prime Minister Modi, as well as the BJP, have given in its vision statement, in its manifesto. And it's on basis of that that they will work towards with the key economic ministries to ensure that that 100-day action plan, which many ministries have already, put forth and will be cleared. And once that proposal gets, it will really pave the way for what will be the economic agenda for the government. There is a budget session which is due. They have time till August of 31st, where a voter account has taken place. The budget is expected to be taking place on the 22nd or 23rd of July. And of course, the economic survey also will be presented. And it's in that context that the government will be setting the stage for, economic development, as you pointed out. Of course, you have spoken about the fact that whether states like Andhra Pradesh and Bihar, who have been asking for special packages, whether that will be done. What we have been told is that special packages can't be done. There will be, central assistance to various projects. For example, in Andhra Pradesh, Amravati, the capital, which had not been utilized for a long time, that will happen. And a host of other measures will be taking place. But these are early days at present. But a host of measures are expected to keep with the 100-day action plan, as well as reaching the target of a 5 trillion economy.
All right, Sunil, thank you very much for joining us on that. Now, Infosys has announced incentives for its employees open to transfer to their Hubli campus. The company aims to strengthen its operations in the Tier 2 city in the Mumbai-Karnataka region. NDTV Profit's Haripriya is now joining us more. Haripriya, take us through why Infosys has had to give out these incentives for employees to transfer to Hubli.
Infosys is offering monetary incentives to its employees who are willing to shift base to its Hubli campus. As the company is looking to strengthen its operations in Tier 2 cities, it is offering incentives up to 8 lakh rupees. All the employees above level 2 are eligible for this transfer policy. Level 3 and below employees, for instance, are being offered 25,000 rupees at the time of transfer and subsequently 25,000 rupees every 6 months for 2 years. The highest level of employees, that is level 7, are being offered 1,50,000 rupees at the time of transfer, and by the end of 2 years that will be 8 lakhs. The company had established the development center in Hubli back in 2022 itself, but there's not a lot of momentum there, and not many employees were stationed there. Because of this, the government had criticized it for not providing employment after promising to do so in the region.
All right, Haripriya, thank you very much for that. Now, India's net direct tax collections for the current fiscal until mid-June have shown a significant increase. It grew by close to 10% to 4.62 lakh crore rupees till June 16th over the previous year. This growth reflects robust economic activity and compliance among taxpayers. The corporation tax accounted for just under 2 lakh crore rupees, while personal income tax stood at 2.69 lakh crores. The provisional figures indicate a strong start to the fiscal. In city-wise tax contribution, of course, Mumbai leads as usual, followed by Karnataka and Delhi. While the government surpasses its tax collection target for the fiscal, by the looks of it and the data so far, it just might. Now, the northern part of the country is reeling under sizzling temperatures. The Met Department had issued a red alert for the national capital for today, with the maximum temperature possibly reaching up to 45 degrees Celsius. Now, the city's water shortage woes, of course, continue. Perhaps some respite is expected on the temperatures front, as the IMD has forecast a slight dip for the rest of the week. The heat wave to severe heat wave conditions are very likely in most parts of Uttar Pradesh, Punjab, Haryana, Chandigarh and Delhi for the next 2 days. Now, even summer holiday destinations like the cold, hilly terrains of Dehradun, Mussoorie and Nainital have not been spared this year. These hill stations are witnessing temperatures never seen before. Air conditioners, of course, are working overtime this summer. The Ministry of Power has recorded the highest ever power demand in North India. The demand has shot up to 89 gigawatts on the 17th of June, and 25 to 30% of the power had to be imported from neighboring areas. Well, in fact, that's all we have time for right now. Thank you very much for joining us on NDTV Profit. We'll be back with more news. Stay with us.